Holy flippity flip flop flapping smokes, everyone. The global elites are panicking and the banks are now holding emergency meetings as a global macroeconomic picture is rapidly deteriorating. They put out some warnings about some major events that will be happening very, very soon and that we all need to start paying attention to. So everyone, what are they so worried about? What is going to happen in the global economy and specifically with the US, with Australia, etc.? Well, that's exactly what we're going to go over in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Look at this, everyone. Guardians of the world economy told to buckle up as outlook dims. I find it kind of hilarious that they're trying to make out these bankers as some kind of superheroes when really they're supervillains. But they are right. It is time to buckle up, everyone, because the outlook is looking very dim indeed. So this was the International Monetary Fund annual gathering of world economic leaders. As the talks ended in Washington on Saturday, finance ministers and central bankers seeking to sustain the world economy's shaken recovery from the pandemic worried Russia's invasion of Ukraine continues to destabilize Europe and stems efforts to boost growth. So of course these central banks all have to find an excuse to blame it on something else. Yes, of course the war with Russia and Ukraine is making the global economic outlook look more grim. It is accelerating inflation, but we already had these inflation problems and we already had these asset bubbles well before the war began. The UK's whiplash on tax cuts and the firing of the UK's Chancellor midway through the meeting and the US Federal Reserve's dollar-boosting interest rate hikes also dominated discussions. Because it's been a full drama show in the UK over the past 2 weeks with this new Chancellor, with Liz Truss announcing these tax cuts, then all of a sudden him getting the sack and running out halfway through the meeting at this IMF annual gathering. And then all of a sudden they get a new Chancellor, they take back all these tax cuts, and then they pretty much just go along with whatever the Bank of England tells them to do. So who's really in charge, everyone? The banks, like the International Monetary Fund, or the so-called elected officials? And like they're saying here, all other central banks around the world and treasuries around the world are getting very, very worried with how much the dollar is surging because it's causing currencies around the world to collapse. Just like the Australian dollar, for example, it's fallen from around 76 cents down to 62 cents in just a matter of a month. So it'll be interesting to see if these central banks can put the Federal Reserve under pressure to pivot, but it doesn't look like that's going to happen anytime soon. Members of the group also sparred over Saudi Arabia's decision to lead an OPEC oil output cut, which was seen as risky as Europe struggles with an energy crisis and the US tries to rein in the hottest inflation in 4 decades. So this is something also huge that's going on right now, when we're having surging inflation and in the US they were draining their strategic petroleum reserves in order to try to bring down gas prices to reduce inflation. Well, now OPEC has all of a sudden said, nope, we're going to cut supply because prices are getting too low, because normally when there's risk of global recession, oil prices fall. So OPEC's just looking out for their own interests. They don't want oil prices to keep crashing, but this is making the inflation crisis around the world a lot worse, and it's going to be more bad news for Europe, which is already desperate for oil. A former International Monetary Fund executive board member noted a lack of high-level engagement from China, the second biggest economy and top creditor to developing countries, stymied the ability to make actual progress. So things are starting to deteriorate within major economies and China. We're seeing escalations with the US, with the EU, China, and other countries starting to escalate, even Australia as well. And China is the second largest economy in the world, so all these central banks and government officials are now starting to call out China for not doing enough. It was overall a fairly pessimistic week, he said. So this is very worrying, everyone. Even though they've held this emergency meeting, it looks like they weren't able to sort out any issues whatsoever. They were only able to discuss some issues, bring some issues up, but there has been zero progress made, and it's only going to get worse. Listen to this. With 60% of the world's 75 poorest countries already in or at risk of debt distress, finance chiefs ranging from Treasury Secretary Janet Yellen urge richer nations to do more to help vulnerable ones restructure their debt. I don't know how these rich nations are going to be able to help these poorer nations, everyone. These rich nations, like the US, well, they're already in huge amounts of debt as it is, $31 trillion. Europe is in a huge crisis with not having enough energy, not having enough gas, so I don't know how much they're going to be able to help. And there's already surging inflation, so printing more money to help these poorer countries is only going to make inflation worse. And we've already got so much issues in our own countries. We've already got so much people struggling in our own countries to really have much more to spare to help these poor countries when most of the money given to them normally gets evaporated by corruption. But it's looking like US Treasury Secretary Janet Yellen is wanting to help these countries more than her own. Yellen criticized the slow progress on G20 Initiative to bring creditors from Paris Club of traditional rich countries together with China to try to restructure the debt of certain low-income countries. China hasn't participated in the effort. So I think China can no longer call themselves a developing country, even though they kind of still are, but they are the second biggest economy in the world. But with China facing their own problems, they're now looking after themselves before anyone else. People expect central banks to keep pressing the brakes until something actually breaks in the expansion. The biggest risk remains a central bank-induced recession. Well, I think we already are starting to see things in the financial system break, like the UK pension funds almost getting margin called and almost going bust. We're seeing bond markets collapse. We're literally seeing the worst bond market crash, with bonds nearly down 50%, which is worse than the Great Depression. And he says the biggest risk is a central bank-induced recession, which I think we're already in a recession, and if we're not even in an official recession, I think an official recession is inevitable. Everyone seemed very worried. Some were saying central banks need to have hearts, and remember that behind every rate increase, there's people suffering. Well, people were starting to see the propaganda come out now. They're saying they need to stop lifting interest rates. People are suffering. Well, I think the poor and middle class are suffering from high gas prices, high food prices, high utility bills. Pretty much everything in the CPI now is rising. But lifting interest rates, do you know who it affects the most? It actually affects the rich the most, because what has crashed the most in price? Stocks have crashed about 25%. Cryptocurrencies are down around 70%. Like I said, bonds are down almost 50%. And who owns the most assets? The rich or the middle class? That's right, the rich own most assets. So really these interest rate hikes are affecting the rich much more than they're affecting the middle class, because unemployment's still at record lows and inflation's still surging at record highs. So if we don't lift these interest rates, really the people who are going to suffer is the poor and middle class by higher inflation. The IMF chief Georgieva urged finance ministers to come up with targeted and temporary measures to ease the pain caused by higher rates, without complicating the efforts of central banks, a sentiment echoed by European Union Economic Affairs Commissioner, who cautioned that not all countries in the bloc are managing to avoid a clash between the two. So you know what she's saying there? She's saying, listen to the banks, the central banks, the big major banks. We run the show. If you try to go against our agenda, you're going to be sacked just like the previous UK Chancellor. So really, the question asked again, who's really in control, everyone, when push comes to shove? Is it the governments or is it the banks? So what you need to know is, everyone, the global economy is rapidly deteriorating. The banks are getting desperate. The banks are panicking. The global elites are panicking. And they're warning us it's time to buckle up and things are only going to get much, much worse. Inflation's going to keep rising. Geopolitical tensions are going to keep getting worse. And it's very likely we're going to be facing a Great Depression and a financial crisis. So everyone, what do you think about this? Let me know in the comments below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.